Once a year, financial planners from across the country stop everything and invest in themselves. That moment is FPA Summit, taking place November 9th through the 11th at the Gaylord National Resort in National Harbor, Maryland. It's where you'll experience incredible speakers, real strategies, and real connections. Find out more and register at fpasummit.org. Registration closes October 23rd. We hope to see you there. Hey everyone, welcome back to FPA Live, where we have conversations with interesting people doing interesting things in and out of financial planning. I'm Ben Lewis from the Financial Planning Association, and here's something I've noticed after many conversations with financial planners over the years. The ones who are really thriving have figured out how to spend more of their time doing actual planning and less of it doing everything else. It sounds obvious, but getting there isn't. Most planning focused financial planners got into this profession because they love helping clients navigate their financial lives. The investment side came with the territory. And for a long time, doing it all yourself made sense. But at a certain point, as your client base grows, as markets get more complicated, as client expectations rise, the investment process starts consuming more of the time and energy that used to go towards planning. Today's guest has built his practice around solving exactly that problem. Eric Stein is a CFA, partner, and senior investment strategist at East Bay Investment Solutions, where he and his team serve as outsourced chief investment strategists for a select group of planning focused financial planning firms. His whole model is built on a simple but important idea that the right investment partner doesn't replace your voice as a financial planner, it makes it stronger. That's what we're going to talk about today: what this kind of partnership looks like and what it takes to make it work, and how financial planners can get deeper investment support without giving up the client experience that they've spent years building. So let's go ahead and dive in with Eric. Once I can bring him in here. Eric Stein, how are you?
I'm great, Ben. How about yourself?
I'm doing okay. I know you're down in the North Carolina area, so you're feeling the same kind of heat that I am here in the DC area.
It is summer in July. Yes, it is all the time.
Yeah, it's the swamp of the mid-Atlantic that we have to deal with. So anyway, so I'm want to kind of first give you an opportunity to kind of talk about East Bay. So, you guys work exclusively with planning focused advisory firms. I mean, that's a pretty deliberate niche that you guys have. What drew you to that specific corner of the advisory universe?
Yeah, I think that's a great question, man. And really, what it was is we felt that the market, the financial planning advisor, was really just underserved. That they have lots of things to do, as you mentioned in the opening. They want to focus on planning, but business owners, you have a lot to do, whether it's running the business or working with your clients. There's a lot that goes into it, and we just felt that advisors really wanted and needed an independent voice, and that's what we try to provide. And then when you combine that with, the planning focused advisors that we talk to are generally very strategically oriented in their asset allocation, the way they think about things, the way they communicate to their clients, and having a shared investment philosophy with us and them. Again, it just allows us to communicate well with them and their clients when needed. So just those two pieces combined really helps us support that niche. And we feel that focusing on the planning focused advisor really, again, allows us to understand who they are, what they need, and serve them best.
So when firms approach you about bringing you in as that outsourced, CIO, um, where are they feeling the most strain? I mean, so when a firm's actually looking at what they're currently doing and their passion's all on the financial planning side of things, what does their firm look like? What is that strain that they're feeling that makes them say, hey, maybe we have to outsource this?
It can be a lot of different things, but I don't think there's one, and that's what makes our clientele so interesting is it's a broad array of different types of clients. But ultimately, what it comes down to is no advisor comes to us and says, "Hey, listen, I can't do investments." That's nobody has said that to us. What it comes down to is really time as a starting point.
Mhm.
Is I have lots of things to do on my plate. I really want to focus on my clients. I really want to focus on growing my business, but I don't have time to figure out all of this information about long short indexing or what's really happening in private credit or even what's happening with the variety of ETFs that are coming out or what they're being sold. So they want to focus on what matters most to them, but they also understand all of those other components matter as well. They just don't want to have to do it themselves. And when they outsource to us and we engage with them, what they also realize is it creates sort of a little level of comfort, knowing that there's a backstop to them of what they're doing, and that also creates a level of confidence. And that confidence exudes itself in their client communication and also in their ability to go after higher net worth clients, knowing that, again, behind them is an investment support system that has access and exposure and knowledge of all the different components their clients may be looking into.
So I guess there's a version of outsourced CIO that makes some planners nervous, like they're handing over something important to someone else who may not know their clients as intimately as they do. What do you think about concerns like that?
Well, from our perspective, we don't have any discretion. Our clients own their book of business, they own their investment philosophy and approach, they own their communication. I can't do anything with their clients without them. I don't have access to their custodial accounts. I don't have access to their names. I don't have access to account numbers. I don't trade for them. So there's literally nothing I can do for their clients without their decision-making power of the advisor. They are in control of everything that happens. So we're there to be a consultant, to be a support system, to provide guidance and advice, maybe play devil's advocate from time to time. But ultimately, I have no ability to impact directly what their clients are seeing or are feeling in their accounts.
So walk us through how this actually works, because I'm sure there's a lot of planners out there who are thinking, I really don't want to deal with this side of the relationship. What does it look like to work with an outsourced CIO on like a day-to-day, week-to-week basis? How are you guys actually working with planners on an ongoing basis to, address, some of the challenges that their clients are facing from the investment side?
Yeah, another great question, Ben. So, from a high level, what we're going to do is once you engage with us, we're going to onboard you, and that's going to take roughly 1 to 2 months. We're going to ask a lot of questions. We really want you to treat us as an extension of your team, because that's what we see ourselves as. So what that means is, again, we're just going to ask a ton of questions, really get to know where you are today, how you got there, maybe what you want to do differently, and what that looks like. We're just going to have conversations about, portfolio allocations, what you're doing with rebalancing, how you're communicating with clients, and just treat us like we're a new employee, because we're not an employee, but we want to be seen again as an extension of your team. So once we go through onboarding, we're going to meet with each of our clients on a monthly basis and really talk to them about things that are happening in their practice. From an investment standpoint, we might be talking to all of our clients about a handful of things each month, and then there are some components that are very specific to them. And then throughout the month, we're available via email, via phone call. Just let us know what's happening. So if your client emails you a question that says, hey, Ben, I'm kind of curious. I read this article about whatever investment fad du jour is. We respond to you, the advisor, and you as the advisor can cut and paste our response and send it directly to your client as, hey, here's what I think. Or, hey, we spoke with East Bay, who's our chief investment strategist, and here's what they think. Totally up to you of how forward-facing we are or how behind the scenes we are. We're never going to communicate directly to your clients without you being present in either a phone call, a video call, or something, or without you giving us approval to share something with your client. Again, we're always going to work through the advisor first.
Okay. So look, there's a number of firms out there that provide this kind of outsourced CIO kind of role. For any planners who are really thinking long and hard about what they're going to do with this kind of function, what do you think are like the right questions, the right things that they should be bringing up with a potential outsourced CIO to make sure that they are working with a firm like yours that is the right fit?
Sure. I think that fit question is really where you want to be starting that question. And it goes around investment fit to start. So, if you come to us and say, hey, we are very tactical in our trading, we're buying individual stocks, we are doing something that's outside of what our shared investment philosophy wants to be, we would tell you very quickly and upfront, hey, we are not the right solution for you, and we're going to point you in the right direction. So we believe that investment fit is paramount to having that success. And part of it is, if we are sending you an email responding to a question, we want to be on the same page. If you're asking questions about individual stocks and your clients are asking about questions about individual stocks, and we don't provide advice on individual stocks, that marriage doesn't work. So we want to make sure we're on the same page. So that investment fit is really paramount to any conversation we have about whether engaging with each other makes sense or not.
So I mentioned this at the very beginning, and it's one of the things that I've gotten to know you a little bit, Eric. And it's a message I know that you're talking about, is that a fractional CIO shouldn't replace the planner's voice. It should actually strengthen it. How do you make sure that's what's actually happening in your work with the planners that you work with?
So it comes from a couple of components. I'd say part of it is just really understanding where the advisor is coming from. So trying to make sure, again, we understand what their philosophy is, what their belief system is, how they developed what their business is today. So if they have a particular niche or if they have a particular style that they think about, we want to make sure our communication with them fits into that same lexicon, the same language that they're using with their client. So a lot of it goes back to that original fit question. Some of it is just listening and asking the right questions of our advisors. And then the collateral that we're providing, the answers that we're providing, we take great strides in making sure that the responses that we provide, anything that we provide from a collateral perspective, is done in a way that many, or hopefully most, clients can understand and digest. We're not throwing out acronyms. We are trying, desperately to keep the language simple in a way that our advisors want to communicate with their clients. Nobody's going to be impressed by sophisticated language. They want to make sure they understand it, most importantly. And that's what we're trying to do in the communication that we provide.
So that's really interesting. So, in your work, if you're writing something for the planner, you're creating content, collateral, whatever it is, you're actually trying to tailor it to fit their unique client niche, for example. So obviously, look, working with, people who are high net worth or business owners is going to be a lot different than planning for planners who work with school teachers or people who don't have that level of assets accumulated. So you're actually like in there actually creating the content that's going to fit that specific client niche that they actually have.
Not on all of our collateral. So, what I'd say is our general collateral that we're providing on a quarterly basis, our PowerPoint decks and things like that, are going to be fairly generic and straightforward. And the advisors have the ability to customize anything they want if they need to. But if you send us a prospect review and say, hey, can you compare this portfolio that my client has versus what my model is, we can do that for you. And we'll, again, try to use the language and making sure that the comparison is accurate, and using the language, again, that the advisor wants to use, in terms of, they might talk about stocks and bonds, they might talk about growth versus capital preservation. We just want to make sure and do what we can to align their thinking with what we're producing to the best of our ability.
Okay. So I want to talk about market volatility for a second, because obviously, look, when markets are skyrocketing, everybody feels good, right? But obviously, when things start to get a little nutty in the markets, that's when I think a lot of planners and advisors can feel a little bit exposed. So when like clients are anxious, they want answers, and the financial planners managing their own stress at the same time. How does having somebody like an East Bay, a fractional CIO partner, change that dynamic?
Yeah, and I think part of that trick is that everybody finds what is nutty in the markets a little bit differently, and how they want to respond to it is also a little bit different. So, we have advisors that we work with that basically say, hey, listen, we have trained our clients very well in that we are not market timing. We don't pay attention to the daily movement of the markets. And when things go up or things go down, don't expect to hear from us, because while we're paying attention to your plan in the markets, we're just not going to communicate that all of the time. That is perfectly fine, and that is what they have chosen to do, and we can accept that and get behind that. We have other advisors that say, okay, we had a significant market movement. If you think about early March with the U.S. and Iran, if you think about other market events we've had over the years, other advisors want to talk to their advisors pretty regularly or very quickly after those kind of events to say, hey, listen, we're paying attention. We're still not going to change your plan unless something's changed in your life, but we want you to know we're paying attention. We want you to know we understand what's happening, and you can feel free to call us if you want. So our role is not to tell them, each advisor, which is right or which is wrong, but to help our advisors communicate for those that want to. So when those market events happen, we are very good at, shortly after those events, providing them with materials, even if it's just short bullet points that they can put together into a client email, or if a client calls, hey, here's what we're thinking, here's what happened. We're not making prognostications of what will happen. We're not changing our models or our allocations or investments most of the time. But again, it allows the end investor to understand my advisor's aware, they're paying attention, they're on top of this, and I can feel comfortable, and I can call them if I have any questions. So that's our role in that. Is the advisor doesn't have to do it themselves. We are there providing that collateral and support that they can privately label and share very quickly with their client base.
That's great. So what makes a relationship with a outsourced CIO work well, and what can actually make that relationship break down or just not really do what the goal is behind having that relationship?
Fit is really the primary function. Again, going back to the earlier conversations, what should an advisor be asking if they're talking to East Bay or any other OCO provider about their services? That fit is paramount. So if for some reason there's not enough candidness in the original conversations and that fit really isn't there, that can certainly break down a relationship over time. But ultimately, if you see the fractional CIO as an investment in your business, allowing you capacity, comfort, confidence to grow and to expand into other investments as needed, and you have a shared investment philosophy. If you think about the largest firms that are out there, the largest RAs in the multi-billion dollars, there's a CIO and often an investment team. If you're a $300 million RIA, you likely don't have the need for a full-time CIO, but you still have those investment needs. And that's exactly where a fractional CIO like East Bay can come in.
So obviously for planning focused firms, those planners who are really focused on the holistic nature of financial planning, there's that desire to have the investment piece connect back to the actual plan itself. You've kind of already talked about this a little bit, but if you can kind of elaborate a little bit more, is there a risk that the portfolio process starts to feel disconnected from the planning conversation? And if there is that sense that maybe this is feeling a little bit disconnected, how do you reestablish that connection with a planner?
I'd say in the years I've been doing this, I have not seen that where an advisor has come to us and felt disconnected from what we're doing. Because at the end of the day, we are there to support the advisor. So if the advisor, and we want to be as involved in their business from an investment standpoint and other components as they'll let us. So if we are doing our job is understanding what's happening in the marketplace, understanding what's happening in the investment world, understanding the economy, and sharing that information with our advisors, their planning concepts, whatever they're doing with their clients, those two things should be married together. And to this point, they have been. So we haven't really had that situation where an advisor has come to us and said, hey, we feel disconnected.
Yeah. So I asked you a little bit of this earlier, but look, I'm sure again, there's planners who are thinking to themselves that maybe outsourcing their investment work is probably going to be right for them. What are some of the other factors outside of like just the questions they should be asking? Like, where should they go? I mean, again, I'm thinking about the FPA community. It's a very sharing community. They all talk about different experiences they've had with different, service providers and so on. Outside of like picking the brains of their peers, where else do you think they can go to kind of evaluate what, fractional CIOs might be good for them to explore?
I would just say have conversations and just ask questions. We are here. I know there are a few other fractional CIOs. Most of them are focused on the institutional space and sort of, I'll say, work a little bit in the high net worth space as well. But there are some others out there, and just ask questions. We're here to help support the advisor community. That's what we do all day, every day. We focus on investments, but there's a large community of I'll say, outsourced professionals out there, whether it's marketing, trading, compliance. That outsourcing community is really a growing community because advisors are recognizing, hey, we can't do it ourselves, and we want support. So we've been able to connect with all of those other, I'll say, fractional components and created a community ourselves, which has been
Mhm.
wonderful. But I'd say for the advisor that has questions, just ask questions. There's no question probably we haven't heard already, but just getting an understanding of how it works, what it looks like on a day-to-day basis, possibly talking to one of our clients or a client that's already using a fractional CIO to see what the day-to-day actually looks like, I think would be really powerful for many people.
So I asked you earlier about what are those signs or indicators that lets a planner know that they're ready for this kind of support? On the flip side, what are some signals that a planner can pick up on that lets them know that maybe they're not ready to engage somebody on a fractional basis for this work?
I'd say like anything else that as an advisor invests in, whether it's a new technology, service, or tool, East Bay is an investment. We're not free, nor is any other fractional service provider. So you have to see us as an investment in your practice. And if you see us as an investment in your practice, you say, okay, hey, here's what the cost is. And if I'm able to grow by X AUM over a period of time, our fee is flat fee. So as an advisor's pie grows, our piece becomes a smaller piece of that pie over time. So, there are advisors that we've been working with for a number of years that, let's say they started at about 200 million as one example, 7 years ago. They've grown to over 500 million in the years we've been working together. Our piece of the pie, our fee has pretty much stayed the same. Our piece of that pie has shrunk dramatically, and we've helped them grow because again, they're focused on their clients, they're focused on their growth, they're focused on hiring new advisors, and they're able to service their clients and have the confidence in their investment platform to know, hey, we have what we need to support these larger clients. So if you see us in an investment, that's where hey, we're ready to do this.
So you mentioned that you work on a flat fee basis. How are other what are the other compensation structures that are typically in place for utilizing the services of a fractional CIO that you're familiar with?
I've only seen two. I've seen flat fee and I've seen basis point based. And we just felt like for us, flat fee made the most sense. If we think about ourselves as a replacement for a CIO at a smaller firm, a CIO would be paid a salary.
Right.
And from our perspective, our fractional fee is that fractional salary. To us, it didn't make sense to be paid basis points. And we've also had advisors tell us, going back to that other example of the advisor that grew from 200 to 500 million, our fee would be much larger at that point. They'd probably say, well, why wouldn't we just have an internal CIO at that point rather than outsourcing it as that fee continued to grow? So it's a much more attractive price point and value proposition for the advisor, just being flat fee focused.
Yeah, it makes a lot of sense to go on the flat fee basis. Not that I'm recommending this to anyone out there listening. Again, every firm is different. You got to make the decision for yourself.
Sure. Yeah.
What's going to be the right compensation structure? All right. So look, I know that we're at time, but I do want to give you an opportunity to tell everybody else a little bit more about East Bay, where they can learn about you, where they can learn more about your services, where they can connect with you directly, Eric.
Sure. No, I appreciate that. And thank you for the opportunity to speak to the FPA audience. I'd say while I'm here representing East Bay is a team. So if you go to our website, you'll see the three folks that make up East Bay. There's Mario Nardone, Alex Klusner, and myself. We are all remote. We all support clients and advisors across the country. So don't be shy in reaching out to us because, again, we do support advisors throughout the country. If you're interested in talking to us, you can find me, Mario, or Alex on LinkedIn. Our website is eastbayis.com. We have a very simple Let's Talk button on the screen that goes directly to my calendar. So if you have questions, if you want to connect, if you're interested in learning more, please use our website. Please use that link, and we'd love to connect with you.
That's great, Eric. Well, listen, thank you so much for taking a little bit of time. I appreciate it. I think this is an area that a lot of planners who are much more focused on the holistic nature of what financial planning is, I think they're going to find this conversation helpful. So I appreciate you taking the time and appreciate everything that East Bay is doing.
We appreciate it too. We love the planning community, and we are so excited to be able to support them.
Excellent. All right. And for everyone, just so you know, what I'll do is when we put up the social clips, I'll make sure I put a link into East Bay's website so you can learn more directly and connect with Eric. So Eric, thank you so much for taking the time today. I appreciate you being part of FPA Live.
Thanks again, Ben.
Excellent. Thank you. All right, let me go ahead and dismiss Eric, and we'll close everything out. So again, everyone, that was Eric Stein from East Bay. Again, take a look. Again, in the show notes and everything, we'll make sure we put a link to the East Bay website. And I do want to mention to all of you that next week's episode is going to be a special one. We're going to have Jeff Judge, an FPA member who has had unbelievable traction from FPA Media Source, our automated media query platform. He's going to talk about the great success he's had and how other planners can utilize that platform for themselves. And in the meantime, I also want to mention that you can see all of our FPA Live episodes on demand at fpahub.org. That's fpahub.org. This episode will be on there in the coming days. And again, go ahead and take a look at all of that. This is episode number 69. So we've done a bunch of these already. So anyway, I appreciate you guys tuning in and taking part in FPA Live, and we'll look forward to seeing you next time on FPA Live. Have a great day, everybody.